Here's a signal that seems to contradict itself. Small business confidence just hit a record high. And yet, nearly half of owners say inflation is still squeezing them hard. Welcome to Small Business Signals. I'm here to help you sort the noise from the news that actually matters for your business. Today, we're breaking down a paradox. Because when confidence and challenges both hit record levels at the same time, something interesting is happening. And understanding it could shape how you approach the next 12 months. The U.S. Chamber of Commerce just released their latest Small Business Index, and the headline number grabbed attention. 72.0 in Q3 2025, the highest ever recorded. But here's what the headlines often miss. That same survey shows 45% of small business owners still rank inflation as their number one problem. So which is it? Are small businesses thriving or struggling? The answer, as it often is in business, is both. And that's exactly what we need to understand. Let's start with what this confidence index actually measures. It tracks how small business owners feel about their own business health, their community's economy, and their hiring plans. And here's the key insight. Owners are increasingly distinguishing between the overall economy, which they see as challenging, and their own specific business trajectory. This isn't cognitive dissonance. It's actually quite rational. You can acknowledge that the road is rough while still being confident in your ability to navigate it. Think about your own business for a moment. You probably know exactly which challenges are squeezing your margins, but you also know what's working and where you're gaining ground. The businesses driving this confidence surge share something in common. They've adapted. They found their playbook for operating in a higher cost environment. That's not to say everything is rosy. Far from it. The same survey reveals that concerns about inflation have held remarkably steady, not declining as many economists expected. Let's get into the specific numbers. The U.S. Chamber Small Business Index hit 72.0 in Q3 2025. That's the highest confidence level ever recorded in this survey's history. By Q4 2025, the index settled slightly to 68.4. That's a dip from the record, but still historically strong and comparable to Q4 2024's 69.1. Here's a stat that tells the real story. More than 60% of small business owners say they feel more positive about their own business than at any point in the past 5 years. But that optimism isn't blind to reality. 45% of small business owners mark inflation as their biggest challenge. That's stable, but still the top concern by a considerable margin. The Chamber noted in their latest report, quote, "Concerns about inflation are stable this quarter, as it remains the top issue among small business owners by a considerable margin." What's enabling this confidence despite inflation? Cash flow. 74% of small businesses say they're comfortable with their current cash flow position. That's a remarkable number when you think about it. 3/4 of small businesses aren't just surviving, they've built enough financial cushion to feel genuinely comfortable. 40% of owners now say they believe the U.S. economy is in good health. That's up from 34% just 1 quarter earlier, a significant shift in macro sentiment. But let's look at what's coming. Analysts from Vistage expect U.S. growth to slow to about 1.6% in 2026. That's notably below recent growth rates. Inflation is expected to ease toward 3%, which would provide some relief. And unemployment may tick up slightly to around 4.5%. Vistage noted that elevated interest rates continue to limit borrowing, and they expect business investment to grow around 3% next year. Modest but steady. Here's where the smart money is going. 42% of small business owners plan to increase efficiency and productivity in 2026 specifically through technology, including AI. So let's step back and understand what this paradox is really telling us. Confident business owners aren't ignoring their challenges. They're focused on what they can control. They've accepted that inflation isn't going away overnight. Instead of waiting for conditions to improve, they've adjusted their operating models to work within these constraints. This is what resilience actually looks like. Not the absence of problems, but the presence of workable solutions. These businesses have found their footing on shifting ground. The businesses that survived the pandemic disruptions, the supply chain chaos, the hiring difficulties, they've proven something to themselves. They can adapt when they need to. But some economists raise a valid concern. Could this optimism lead to over-leveraging? Could confidence make businesses underestimate genuine risks that are still very real? It's a fair question. Confidence is valuable, but overconfidence can be dangerous. The signal here isn't to feel good, it's to feel prepared. Let's look at what the most confident businesses are doing differently. First, they've prioritized cash reserves. That 74% comfortable with cash flow didn't happen by accident. These businesses have been intentionally building buffers. 3 to 6 months of operating expenses isn't paranoid. It's what allows you to feel confident when headlines turn scary. Second, they're investing in productivity. That 42% planning technology investments in 2026 aren't just chasing trends, they're controlling what they can control. When you can't control supplier costs or interest rates, you can control efficiency. Technology, especially AI tools, lets small businesses do more with their existing resources. Third, these businesses have adjusted their pricing strategies. They're not absorbing every cost increase anymore. They're passing along costs strategically while maintaining customer relationships. The key word is strategically. That doesn't mean raising prices across the board. It means understanding which products or services can bear increases and which are price sensitive. Fourth, they're deepening customer relationships. Loyal customers provide resilience during downturns. They're more likely to stick with you when cheaper alternatives appear. Now let's talk about the warning signs to watch. Because confidence is wonderful, but awareness is essential. The economy doesn't send formal announcements before turning. Slowing GDP growth to 1.6% means the overall pie isn't expanding as quickly. That translates to more competition for each slice of consumer spending. Rising unemployment, even slightly to 4.5%, means more caution among consumers. People who worry about their jobs spend more carefully. And elevated interest rates aren't going anywhere fast. If you're planning to borrow for expansion or equipment, factor higher financing costs into your calculations. So what should you do with this information? Let me give you some practical steps you can take right now. These aren't theories. They're what the confident businesses tend to be doing. First, build your cash reserve if you haven't already. Aim for 3 to 6 months of operating expenses. This is what separates comfortable confidence from nervous optimism. If you're part of that 74% already comfortable with cash flow, consider whether you have enough runway to weather a rough quarter without making panic decisions. Second, focus productivity investments on areas you actually control. Operational efficiency, customer retention tools, and technology adoption tend to have the most reliable returns. Consider what that 42% investing in technology are doing. They're not buying AI for the sake of it. They're finding specific tasks where automation creates real-time savings. Third, create a simple economic trigger list. Write down specific metrics: revenue decline of 10%, margin compression below a threshold. That would prompt defensive action. This isn't being pessimistic, it's being prepared. Having predetermined triggers means you won't hesitate or second-guess when conditions change. You'll know exactly when to act. Fourth, review your pricing strategy quarterly rather than annually. Inflation isn't a one-time event. It requires ongoing adjustments to protect your margins. Many businesses find that small, frequent price adjustments are less jarring for customers than large annual increases. Consider testing this approach if you haven't already. Fifth, invest in customer relationship deepening now, while conditions are relatively stable. It's much easier to strengthen loyalty before a downturn than during one. Your best customers are your recession insurance. A loyal customer who trusts you will stick around when competitors start slashing prices to attract their business. Now, one more thing about this confidence survey. The numbers reflect what's working now, but conditions in 2026 may look different than today. Plan accordingly. Remember, the Q4 index already pulled back from that Q3 peak. 68.4 is still strong, but the direction matters. Watch whether confidence continues stabilizing or starts declining. The businesses that will thrive in 2026 are likely the ones that use current stability to prepare for instability. They're not complacent about confidence. They're strategic about it. Think of confidence as fuel, not as a destination. It's what powers your ability to make moves, to invest, to hire, to expand. But fuel without direction just burns. The signal we're seeing is that small businesses have found their footing. They've adapted to operate profitably in a high inflation environment. That's genuinely encouraging. But the next adaptation may already be needed. Slower growth, higher unemployment, continued elevated rates. These require their own playbook adjustments. The businesses that will navigate 2026 successfully are likely the ones taking action now while conditions allow. Not panicking, but preparing. Not retreating, but positioning. Use the confidence you've earned. You've made it through genuine challenges. That experience is valuable, but don't let confidence become a substitute for vigilance. So here's your signal from today's episode. Record confidence isn't denial. It's earned. But it needs to be paired with preparation. Build your buffers. Watch your triggers. Stay ready. Quick reminder. This is not financial advice. It's information to help you think through your own situation. Always consult with qualified professionals before making significant business decisions. That's it for this episode of Small Business Signals. If this was useful, subscribe so you don't miss the next one. Until then, keep watching the signals that matter for your business.